Hello and welcome to the second day or the second class of the Strategic Business Leader exams, and we're preparing ourselves for December 2018. I am Kashif Kamran, your tutor. Now, yesterday we left the session in the middle of this article. We were doing extracts of this article yesterday, which is pertaining to the agency theory, and the title of the article was Organizing Transactions. Now, in the article yesterday, we read through the transaction cost theory, and I did justify that what it is. Then we went on market or internalizing, and we had a word on what market and internalizing is in terms of the cost. And then we work on frequency. Now we were left with fourth and fifth, which I will be winding up today and starting on with the next topic. Now, in terms of the transaction cost theory, or in terms of the cost associated with transaction, there is another element known as uncertainty. Now, we know uncertainty is very important when we talk about decision making, long-term decision making. When the directors are taking decisions about the future, there is a lot of uncertainty, and everything does not come out the same as you thought. Everything does not go the same track you thought of. There is a lot of uncertainty because the directors are taking decisions about the next 5 years, next 4 years, next 3 years, next 2 years, next 1 year. There is a lot of uncertainty in that, and uncertainty can keep the cost uncertain. You might need to face extra cost in future. Your cost estimates can be wrong. You might have predicted that I might be incurring $10 million cost, but for any future event, the cost escalates to $20 million. You might think about it, I will be incurring a $10 million cost on my marketing budget. But because the competitor was so severe and the competitor actions were so severe that you need to increase your marketing cost from $10 million to $20 million. So uncertainty can play a crucial part in your cost and in your cost increment, because there are so many things for which we cannot be prepared. Uncertainty can come anytime. We are not prepared for it, and when we're not prepared for it, they can affect the cost. So if there is a competitor who is giving me a tough time, and I have kept aside $10 million for marketing, and the competitor starts to give me a tough time, I might think that I have to increase my marketing cost because I have to face the competition which is coming from the competitor. So at times the uncertainties which is in the political environment, the uncertainties which is in the economic environment, the uncertainties which is in the social environment can have an impact on the cost and can have an impact on revision of the cost. So let me put that in the Word file. We are going the same way with the article, right? The article relating to organizing transactions. And we are dealing with the point 4 of this article now. We have done the first 3 in the class yesterday. So we're dealing with the point 4, which says frequency. Sorry, which says uncertainty. Yes, the screen has been shared, Kim. So we were dealing with uncertainty, and in terms of uncertainty, the uncertainty relating to the future, right? The uncertainty relating to the future can affect the cost, can cause upward revision, in cost, upward revision in cost. Uncertainty relating to the future can affect the cost, can cause upward revision in cost. because the future events, the future events are uncertain. What future events are? What cause uncertainty? What is uncertainty? The uncertainty, the uncertainty relates with the external environment, normally known as pestle. We know pestle, right? You will be covering pestle in the part of the syllabus with which Mr. Rajaz will be dealing with. But all of you know pestle, right? Pestle is the external environment: political, economic, social, technological, environmental, legal. And this environment keeps changing. This environment is not static. When this environment is not static, it keeps causing uncertainties. It keeps causing uncertainties for the business, and that can escalate your cost. So you cannot be sure about your cost. Even if you take a decision and you set aside $10 million for it, the $10 million can be lesser due to uncertainty. There could be something in the future which might take your cost from $10 million to $20 million. So the directors should be prepared for uncertainty. And a better director is the one who is prepared for uncertainty. So if a director is prepared for uncertainty, he is a better director. So you cannot avoid uncertainties, right? Uncertainties is part and parcel of business decisions. And the bad thing with uncertainty is it can affect your budgets, it can affect your targets. It can badly affect your budgets and can escalate your cost. So in terms of organizing transactions, the directors need to think about the uncertainty element and how uncertainty affects transactions and how uncertainty affects the cost. Then the last one, asset specific, cost related with specific assets, asset specific, the cost related with specific assets. The organization or the directors have to be very careful of the cost related with specific assets. Each asset have a specific cost. For example, the capital expenditure. The capital expenditure is a very, very significant cost. What about research and development cost? How many companies cannot survive without research and development cost? Imagine a pharmaceutical company. Can a pharmaceutical company survive without a research and development cost? The research and development cost is a critical cost for a pharmaceutical industry. And we know the development cost is an intangible asset. The capital expenditure could be a tangible asset. The development cost is an intangible asset. Your technological industry, your fashion industry, can a fashion industry survive without research and development? That is such an important cost. That is such a specific cost to your fashion industry, to your technological industry, to your pharmaceutical industry. So asset specific cost, capital expenditure cost, research and development cost. Then the cost which relates with the inventory purchase cost, the cost of purchasing the inventory. The cost to trace or the cost to trace the receivables, the cost you incur to trace your receivables, the cost you incur to pay your credit controller, the credit controller who's so very important to trace the bad debts, to chase the receivables, not to trace, to chase. Cost to chase the receivables, to pay your credit controller. How much cost you incur on the specific assets. You incur cost on receivables. You incur cost on chasing receivables. You incur cost on purchasing inventory. You incur cost on intangible assets. You incur cost on tangible assets. So there is this cost, right? You're incurring. So at the end of the day, this simple article we started yesterday, organizing transactions, the director should realize that each decision they take have a cost. Each decision they implement have a cost. They cannot just avoid the cost. They cannot avoid the cost, but they can minimize the cost. They can take good decisions, right? They can take good decisions to minimize the cost. They should take decisions which minimize the cost. The business cannot be run without zero cost, right? The business has to be run with cost, but at least you should bring improvements in your cost. You should bring proper cost cuttings. You should improve your systems. You should improve your process so that there is a cost cutting, because cost cutting is very essential. The cost cutting is essential to improve your net profit margin. The cost cutting is very important to improve your gross profit margins. I hope you're understanding the sense of organizing transactions. So you cannot eliminate the transactions, right? But you have to organize the transactions in a better way, in a better manner, so that your gross profit margin goes up, your net profit margin goes up. So you have to bring efficiency in the business. You have to bring efficiency in your businesses. And that all depends upon the director, and the director taking decisions about the future. Okay, now that's completing this topic we started yesterday in the class, which was pertaining to agency. Now we're starting on with the second topic under corporate governance. And the second topic we are starting under corporate governance is a very, very important topic, and a topic which can be very important when you look at a case study, because without this topic, a case study cannot be made. And this topic is known as a stakeholder topic. This is a big topic. This is not just covering the stakeholder analysis, it is also covering organization social responsibility. So this topic has two parts, not just a simple stakeholder analysis, but the corporate social responsibility, the CSR, which has become such a buzzword and which has become such an important business practices in the last 10 to 15 years. So we have to do two things in this topic: stakeholder analysis and organization social responsibility. Let's open this topic. Who are stakeholders? Again, there is an article which says all about stakeholder part 1. If you visit the website of the strategic business leader, this website where you have the technical articles, relating to the strategic business leader exam. Under the technical articles, you can see the first two articles. The first two articles are written on stakeholders. Stakeholder part 1, stakeholder part 2. You have to read these two articles. These are such fundamental articles which will develop your knowledge about stakeholder, and the knowledge which will play a crucial part in adapting to the case study. So please do read these two articles in front of your screen. Stakeholders part 1, stakeholders part 2. Please do read it. Please do read it. Very, very important. Okay, so who are stakeholders? As simple as that. The definition, SBL exam is not about definition. SBL exam is not about reproducing the definition. SBL exam is not like Freeman 1984 inverted commas open. You need to conceptually understand this. You need to conceptually understand the definition. You're not understanding the definition, Freeman 1984 open the inverted commas. Not that way. Who are stakeholders? Stakeholder is a group. Stakeholder is a group, or stakeholder is an individual who can affect or be affected by the achievement of the organization objective. So it is a group, it is an individual, who can affect or who can be affected by the achievements of the organization objective. And we know what is the objective of the organization. One of the most important objective of the organization is profit, is profitability. So when the organization achieves the profits, it connects with so many stakeholders, right? When you achieve the profit as the bottom line of your income statement, that bottom line of the income statement, which is the profit, you cannot get that profit without interacting with stakeholders. You cannot get that profit without interacting with groups or individuals. You cannot get that profit, right? You have to interact with so many people getting the profit. So let's get back to the word file quickly and do a quick analysis on this. Okay, we are starting on with the fresh topic today on day 2. So let me take a fresh page for that. And we're starting on with stakeholders analysis as a very, very important topic. So stakeholder analysis. Let's discuss under stakeholder analysis. Right, this is the topic 2. Okay, now understand carefully. See, the organization has to achieve a profit, right? The company has to achieve a profit. And to achieve a profit, it needs to interact. It needs to interact with the stakeholders. The stakeholders are very important. The stakeholder plays a crucial part in your business success. They can be affected by your organizational activity. Let's take an illustration, right? Let's take an illustration. Okay. The company, right? And this company has an objective. This company wants to get profits. Now, profit is your objective, and no one can deny that. But to achieve that profit, you need to interact. The company needs to interact. With whom is the company interacting? The company is interacting with stakeholders. The company is interacting with stakeholders. Why? Because it will help them in achieving the profit. Now try to understand the importance of these stakeholders with whom you're interacting. You're interacting with whom? You're interacting with your employees. First of all, if your employees are not motivated, you will not get the profit. You need to interact with your customers. You need to interact with your suppliers. You need to interact with your banks, because if they does not give you loans, you cannot get profits. You need to interact with the regulators for compliance of laws and regulations, because if you fail to comply with laws, your business can be closed down, your business can be penalized, your business reputation can be affected, and the list goes on, right? This is an unlimited list. But try to understand the perspective here. The company needs to get profit, right? And they have to interact with stakeholders. And you know how important these stakeholders are, right? They're all important stakeholders which contributes to the profit, You cannot deny them. Employees, customers, suppliers, banks, regulators, they play such a crucial part in your bottom line. Without their efforts, without their interactions, you cannot get to profits. So the business knows the importance of these stakeholders, right? And the business needs to know the importance of these stakeholders, because you're not running a one-man show here. You're running a show here which is collective. It is the collective success of the business. And the business success is not just coming by a director himself. The business success is coming through the interaction with stakeholder. The more, the better. So who is a stakeholder? Anyone who can affect or who can be affected. How many times the organization affects the environment when they are achieving the profit? How many times the organization affects the customers, the suppliers, when they're achieving the profits? And how many times the company gets affected? If the supplier refuses to provide raw material, the company gets affected. If the bank refuses to provide a loan, the company gets affected. If the employees are unwilling to work, the company gets affected. And if the company is unwilling to give a good salary to the employees gets affected. There is a two-way communication, right? There is a two-way process here. So they can affect, they can be affected. So you all know importance of stakeholder, right? This is something very journalized. Okay, let's go back and see what else we have on the presentation. Who are stakeholders? Second, what are stakeholders' claim? What are the claims of stakeholder? Each stakeholder have a claim, right? That is why it is a stake. Stake means claim. Each stakeholder has a claim. And look at the table in front of you. Just go through the table. This is a self-explanatory table. I'm not emphasizing on this table. This is such a natural thing you do in the F1 exams even. What are stakeholder claims? See the list of stakeholder and see the claim of the stakeholder, what they want from you. Just go over this in like 1 minute. And then raise your hands, right, if you understand this, so I can proceed to the next slide. Right, so each of the stakeholder have a claim, and that is the reason they are connected with you. That is the reason they are with you, because they have a claim and they want you to satisfy their claim. They want the directors to satisfy their claims. The next thing, classifying stakeholders. The easiest way to classify stakeholders for a director, the director should know who are my internal stakeholders. And it's so easy. Who are my internal stakeholders? The management and the employees. Who are my external stakeholders? The public, the local community, the pressure group, the government. But who are my connected stakeholders? Shareholders, customers, suppliers, and banks. I hope you know the difference between external and connected. See, all connected stakeholders, interestingly, are external. All connected stakeholders are external. None of them is internal. But the difference between external and connected is that the one who is connected is external, plus it has a contractual term with the company. It has a contractual. Why are they connected? Because they have a contractual term with the company. Shareholders have a contractual term, customers have a contractual term, suppliers have a contractual term, banks have a contractual term. They all have contractual terms. So who is a connected stakeholder? One who is external as well as having a contractual term becomes connected. Now just try to understand something quickly here. When we speak of the stakeholders, remember one thing. There is one thing known as a stakeholder relationship management. Stakeholder relationship management, SRM. This is such an important relationship management because you're connecting with your stakeholders. In a lot of companies, you must have seen some departments like such. You must have seen departments like customer service department, customer service department. You must have seen customer facilitation desk, customer facilitation desk. These are parts of the relationship management, stakeholder relationship management. In a lot of companies, you must have seen investor relationship department, investor relationship department, supplier supplier facilitation desk. What these are, these departments or these desks are relationship management. Stakeholder relationship management is very crucial, right? Is something very crucial. It's something very crucial. And the directors and the board of directors should realize this. And the more they realize, the better for them. So there are so many faces of this relationship management: customers, relationships, facilitations, so on and so forth. And bigger the company, bigger this relationship is. Bigger the company, the more complex this relationship is. Look at these multinational giants like Unilever, like Procter and Gamble, like Nestle, like Kraft. Look at Walmart. Look at these big giants. Look at these big giants, how complex their relationship management would be. They have local suppliers, they have international suppliers, they have local customers, they have international customers. See the employee base. Unilever, P&G, they have thousands of employees working. So it becomes more complex. Imagine the Boeing premises, imagine the Boeing company, how complex it is. So stakeholder relationship management can be very complex topic for a larger organization like Boeing, like IBM, like Apple, like Nestle, like P&G, like Unilever. Complex. Now, the important thing is being a director of a company, role play, being a director of a company, you should analyze your stakeholders. You should analyze your stakeholders. How? Something known as Mendelow metrics. And in the exam paper, you need to demonstrate this Mendelow metrics. You need to have a you need to demonstrate it visually. You will draw the Mendelow metrics in the exam paper, and you will tell this stakeholder comes here, this stakeholder comes here. You need to illustrate the Mendelow metrics, not by the book knowledge. You need to illustrate the Mendelow metrics through the case study in the exam paper. Let's understand that if you're a director of a company and you should analyze your stakeholders, how would you analyze your stakeholders? Through the Mendelow metrics. See this? Step number 1, being a director of a company, you should first identify the stakeholders. That's very simple. Every director knows who my stakeholders are, whether they are internal stakeholders, whether they are external stakeholders, whether they are connected stakeholders. You should identify stakeholders. Then the second very important thing you should do as being a director is to prioritize the stakeholders. Who are important stakeholders? Who are important stakeholders? Prioritize the stakeholders. Number 3, understand the stakeholders. Understand the stakeholders. What? Understand the stakeholders in terms of their claims. What claims they have? What claims they have? First, identify all of them, then prioritize them, and the one you prioritize, then understand them. Understand their claims, understand their issues, understand their problems, and then manage them on a regular basis. Manage them on a regular basis means Keep identifying them, keep prioritizing them, keep understanding them, manage them on a regular basis. Claims. So if you're a director of a company, you should first identify your stakeholders and then you should prioritize your stakeholders. Now, how would you prioritize your stakeholders? How would you prioritize your stakeholders? This is how you prioritize your stakeholders. Mendelow metrics. Through Mendelow metrics. Because the Mendelow metrics will tell you the influence of a stakeholder. And on the basis of the influence, you can set the priority. So if someone asks you how you give priority to your stakeholders, you give priority to your stakeholders on the basis of the influence. So the influence leads to priority. How you set the influence of a stakeholder. The Mendelow says the influence is determined on the basis of the power and on the basis of the interest. And the interest can be low, the interest can be high of a stakeholder. The power can be low and the power can be high of a stakeholder. And on that basis, we have 1, 2, 3, 4. We have 4 types of stakeholders. Let's critically understand that. In the exam paper, being a director, you have to visualize the Mendelow metrics. So in the exam paper, you will say, in the exam paper, the stakeholders will be given, right? You just need to visualize the stakeholders. How would you go about it? You will tell examiner, this is how I would visualize them. I will tell examiner there is an interest, and I will tell examiner there is a power. And I'll tell examiner that on the basis of this, now I'll start reading the case study in the exam paper. And in the case study, I will come across many stakeholders. And I have to judge looking at the case study, where would I classify them? Should I classify them under low interest and low power? Should I classify them under high interest and low power? Should I classify them under high power and low interest? Or should I classify them under high power and high interest? Now, logically, you know the priorities here, right? This is the first most important stakeholder for any business. This is the second most important stakeholder for any business. This is the third most important. And this is the fourth most important. Prioritize. You need to prioritize them. How are you giving them the priority? You're giving them the priority on the basis of the Mendelow metrics. Because the Mendelow metrics is telling you, let me take it to the fresh page so I can have a better space to analyze this. Okay, the Mendelow metrics is telling us that a stakeholder who has a power multiplied by interest, is equal to influence. Power multiplied by interest is equal to influence. So we have to judge the influence looking at the case study. The case study would help us to understand the influence of a stakeholder. Now let's do an exercise on it. Now, as per the Mendelow metrics, there are 4 types of stakeholders, right? And we need to judge their influence in the context of the exam paper. Now, these are the 4 types. The one which have low interest and low power is known as minimal efforts. So a director will say, oh, this is minimal effort for me. I should not do anything for him. I'm least bothered about him because this is minimal efforts for me. See the response. See the response of a director. These are responses of the director. The director thinks, okay, the one who is low and low is a minimal effort for me. So what is this? This is the response. This is the response of a director towards the stakeholder. This is the response. This is the response of a director towards the stakeholder. But the director thinks if someone has a low interest but has a high power, low interest but has a high power, sorry, low power but have a high interest, the director would think, okay, this is keep informed for me. I should keep him informed. Not minimal effort, I should keep him informed. I should keep him up to date about my business, about my policies, about what am I doing. So I should keep him up to date. Then next, if the stakeholder has a high power and has a low interest, high power and low interest, keep satisfied. You have to keep him satisfied. Why? Because he has a high power. And the key players, see the bottom two, the good thing with the bottom two is they have high powers. So the moment you see the high power coming in, the high power made them important. The one above the line have low power, the one below the line have high powers. Keep satisfied. And the last one is the key players. The director will think they are key players for me. The director will think they are keep satisfied for me. So that's very important, right? Now, how would you judge that in an exam paper? How would you judge them to be what? Let's do the exercise. Right, let's do an exercise on Mendelow metrics. The power is to exert pressure. The power is to exert pressure. The power is to exert pressure, which could be due to the position, which could be due to the nature of the stakeholder, or which could be through the stakeholder actions. Power is to exert pressure. Either you exert pressure because of your position, you exert pressure because of the nature of the stakeholder, or you exert pressure through the actions, through the stakeholder actions. Let's take an example. For example, how would you pick that in exam paper? For example, number one, the government. Automatically, when I see a government, the government has the power, and they have the power because of the nature of the stakeholder. So does government has a default power? Does the government has a default power? Why? Why the government have a default power? Because that's the nature of the stakeholder. So in the exam, you can pick the government and you say, okay, I don't need to see the case study because government is powerful. Government is powerful. They have a default power because of the nature of the stakeholder. Second, the director has a power, and they have a power by position. They are a director of a company, right? So they have a power by position. So if the case is telling me about a director, the director has a power by position, right? The government has a power by the nature of being the stakeholder. Imagine about the pressure groups. The pressure groups. The pressure groups have the power because of their action. Pressure is their action. So has power by actions, because you know the pressure groups are very powerful. They exert pressure. The pressure is the power and the pressure is the action. The trade unions are the pressure groups. The environmental pressure groups, they exert pressure, right? Environmental pressure groups, trade unions, and each government has a power, right? Even the local government authority, even the regulator which falls under the government has a default power. So are you understanding the power? So can the power be by position of a person in the case study? Is that true? Can it be through the nature of the stakeholder? And can it be through the actions of the stakeholder? So will you be able to pick up the power in the case study? Please be very clear on power. Is everyone clear on the power? Are you understanding what power is for a stakeholder? So power can be by position, by the nature of the stakeholder, and it could be through the stakeholder actions. Now let's see what is interest. Interest is the interest in the activities of the business. Interest is interest in the activities of the business, right? Let's cut it short. Interest in the activities of the business. Now that interest can be limited or can be maximum. Okay, let's go one by one. Interest. The regulator interest. Is the regulator interest limited or maximum? The regulator only have interest in what? The regulator interest is equal to only compliance with laws. So that's very limited interest of the regulator. The supplier has an interest, but that is a very limited interest because the supplier only wants timely payments for the raw material provided. The operational staff have an interest, and they just have an interest in getting their wages and salaries on time. That's the only interest they have. But if you categorize the directors have an interest which is very wide. They have a wide interest. They have a maximum interest, because they're not just concerned about the running of the business, running of the whole business. They're also responsible for the future. They're also responsible for making strategies. They're also responsible for making goals. They are so important. See their interest. What is the interest of the pressure group? The pressure group interest is very limited, right? It's only limited. Imagine the environmental pressure group. The environmental pressure group will only have interest in environment. Environmental pressure group will only have interest in environment. Only interest is environment. Think about a shareholder. The shareholder interest is very maximum, because the shareholder takes interest in the future of the company. The shareholder takes interest in the profitability of the company. The shareholder takes interest in the dividends of the company, in the performance of the company. in the performance of the company. But again, that varies. If you have a minority shareholder and you have a majority shareholder, both will be very different. The minority shareholder has a limited interest, but a majority shareholder has a maximum interest. I hope you're understanding interest. The interest of a stakeholder can be maximum, can be limited. So some stakeholders, every stakeholder have an interest, right? Every stakeholder have an interest, but some have more, some have less. So on that basis, you need to judge in the exam paper where to classify the stakeholder, where to classify the stakeholder. Okay, let's do an activity. Let's do an activity. Okay, let me bring something in front of you. I'm just bringing something in front of your screen just for 1 minute, so you can exercise and tell me something, how much you have understood this. Okay, you can see in front of your screen a case, and I want you to do something here, right? Can you read the first 2 paragraphs of the case? These 2. And there is a person coming here, Mr. Krull. Mr. Krull. Can you read the first 2 paragraphs and justify to me what is the interest of Mr. Krull and what is the power of Mr. Krull? And according to that, can you justify me what position will you give to Mr. Krull? Will you give him minimal efforts? Will you give him keep informed? Will you give him keep satisfied? Or will you give him key player? Just read the case and tell me quickly. Let's see who gives me the right answer for Mr. Krull and who placed Mr. Krull perfectly in the Mendelow matrix. Your time starts now, right? And once you've read, you have to chat with me in the chat window, telling me your answers. Okay, have all of you read this? So what's the answer? Where have you placed Mr. Krull as per the Mendelow matrix? how would you deal with that in an exam context, Mr. Krull? And how would you go about placing Mr. Krull in a context of a mentometrics? Okay, first answer is coming from Adnan Khan, and Adnan Khan is saying I'll put him in the key players. No, Kim. I don't want connected or external. I want the classification as per the Mendelow metrics. So Adnan is saying key players. Muhammad M. Rosan is saying that you will put him under keep satisfied, right? Is that the right answer, Muhammad Rosan? Third means the keep satisfied, right? Keep informed. Okay, you will keep him informed. Okay. Kim is saying key players. And Alisa, he is an external stakeholder and he should be a key player. Interesting. Kim, Annalisa, Muhammad Rosan, and Adnan Khan. All of you have got wrong answers. That was just the first drill of the strategic business leader exam. Who are key players? Who are key players? If you're a director of a company, who are key players? The one who participates in the business on a regular basis. Your key players can be directors, your key players can be non-executive directors, your key players can be institutional investor. How can you make Mr. Krull your key player? Is he in your business on a regular basis? Is he in your business? Uh, is he having any interest in your business? He just wants the protection of his farmland. That is the self-interest of Mr. Krull. Mr. Krull only wants the protection of his farmland. And what is the power? Yes, the power is he can take a legal action. So the power is high because he wants to take a legal action. But what is the interest? You got it wrong, Mr. Krull. See what Mr. Krull was doing. Mr. Krull has a high power. Why? Mr. Krull has a high power by his actions. By his actions. What actions? Legal actions. He threatened, see the language. He threatened to take a legal action. So he has the power, no doubt about that. But what about his interest? His interest is only in the protection of his farmland. That is the self-interest of Mr. Krull. That is his self-interest, right? How can his self-interest become high here? Why you thought of a key player? If I am a director of this company, which is making a railway track, I should keep Mr. Krull satisfied, right? If I want to make the route B, if I want to make a route of a railway track through Mr. Krull farm, I have to negotiate with Mr. Krull. I have to keep him satisfied. If I fail to satisfy him, I cannot make my railway track. Mr. Krull is a keep satisfied. He has a high power, but he has a low interest. Why would I say Mr. Krull is my key player? Is Mr. Krull my financer? Is Mr. Krull my investor? Is Mr. Krull my director? Is Mr. Krull sitting in my boardroom? So how can I make Mr. Krull my key player? Such individuals cannot be key players of a business, right? So Annalisa, are you getting the right answer now? Are you clear? Mr. Krull is a keep satisfied, right? Mr. Krull cannot be a key player. He cannot be keep informed. He has a high power, right? And the high power was given in the case. Adnan Khan, he's protecting the jobs of his farm. He's just thinking about his self-interest, right? He's just thinking about his self-interest, Adnan. He's not protecting the jobs at the national level. He's protecting the jobs at his farm level. If you are thinking in the broader interest, if you're thinking in the broader interest, then imagine constructing a railway line is so important for our national economy. So is Mr. Krull thinking in the national economy? If Mr. Krull is Mr. Krull thinking in the greater interest of the economy? He's just thinking about his farmland. If you construct a railway track that can bring economic prosperity to your region, is he thinking that way? No, he's not thinking that way. He's just thinking about my farm, my people. If you think about my farm and my people, you are showing egoism. And egoism cannot be high interest. Egoism has to be low interest. So Mr. Krull, right? Who is Mr. Krull here? Mr. Krull is an individual, right? And we have to negotiate with Mr. Krull. So Mr. Krull has to come as a keep satisfied here. Keep satisfied. So you got the first wrong. Let's see if you can get the second right. I'm taking you back to the case. See the last paragraph and tell me how would you classify this one? Take the last paragraph. There is a stakeholder, save the bird. Read the last paragraph. Tell me where would you classify save the bird? Sarah, egoism, right? Egoism means I'm just looking at my own interest over the national interest. I could have been pluralism if I would have seen the national interest. I'm just looking at my farm and I don't want the railway track to be constructed. So am I not looking at my own farm being my self-interest, being my egoism? And am I not denying the greater economic interest? How much economic prosperity can come to a region because of the railway track, because of the railway line? I hope, Sarah, you're understanding that. So egoism is I'm looking at myself. I'm looking at my farm. Am I looking at the national economy? Am I looking at the greater interest of the national economy? So I'm not looking at the pluralism, right? I'm looking at the egoism. Pluralism is the interest of the wider society. Okay, now read Save the Bird and tell me where would you classify Save the Bird, because all of you got the first wrong. So now you have to tell me what is the power of Save the Bird and what's the interest, and on that basis where would you put him in the Mendelow matrix. Okay, who would start giving me the answer? Save the Bird, where to plot Save the Bird? No one is giving the answer, right? I think all of you are afraid of giving the answer because all of you got the wrong answer in the first go. So I believe now all of you are hesitating giving the answers and you're waiting for others to give first. Okay, Adnan Khan has come with another wrong answer. Keep informed. And Kabu has come with another wrong answer. Minimal effort. And Elisa has come with another wrong answer. Keep informed. Kim has come with another wrong answer. Minimal effort. Is not there a power of Save the Bird? Is not Save the Bird a pressure group? And I just told you in my lecture that the pressure group has a power by action. I just told you that in my lecture that a pressure group, whatever the pressure group is, has a power by action. Is he not taking an action? Is not the pressure group telling us that they want to take a direct action? They want to take a direct action to disrupt the building. Is that not giving them the power? Is that not giving them the power? It is a pressure group. The pressure group has a default power. the pressure group has a default power. So how you classified them as minimal effort, Kabu? How you classified Kim as a minimal effort? Direct action, it was a pressure group. You underestimated the pressure group. The pressure group has a default power, just like the government, because it's a pressure group. Is that clear to all of you, Kim, Kabu, and Alisa? And what's the interest? The interest is saving the birds, saving the breeding grounds of the bird. Now that is the low interest, because again in the commercial era we are living in, just to save the bird, I cannot stop the economic prosperity. That is a bitter reality of the world we are living in, right? That is a bitter reality of the world we are living in, but that is the reality of the world. We have seen growth of America, growth of China, growth of the superpowers just at the expense of the environment. So environment is a narrow interest here. Saving the birds is a narrow interest here. But I have to give economic prosperity the precedence. I have to give economic prosperity the precedence over saving the birds. So the interest here is low because they only have interest in saving the birds. Do they have interest in economic prosperity? Give me the answer. Do Save the Bird have any interest in economic prosperity? Do Save the Bird have any interest in the future of this country? They're just concerned about saving the bird, right? So is that not a bitter reality of the world you all are living in and I am living in? Is that not the bitter reality of this world? That we are doing expansion of this world at the expense of the environment. Is that true? Is that the bitter reality? Everyone can give me the answer. Is that the bitter reality? That we are progressing as nations. We are progressing as nations on the expense of the environment. We are progressing as a world on the basis of the environment, on the expense of the environment. And Alisa, you gave a no answer. Why? Are we not progressing at the expense of the environment? Are we not affecting the environment? Are we not the one causing the global warming? Are not we the one causing the global disasters? Are not we the one causing the global change in the weather patterns? See how many bigger typhoons and bigger cyclones are coming to America just because of that greater global warming. And who is responsible for this global warming? The business community, all of us. Okay, sorry, Annalisa, if that was the answer for Save the Bird, right? So do everyone agree that Save the Bird is keep satisfied? So can I classify uh, Save the Bird as keep satisfied? And what was the reason? The reason was it has a high power because it was a pressure group, and it has an interest. It has an interest just in saving birds. So that was a low interest. So both times, all of you got the wrong answer. I think Mohammed Rosan got the right answer second time. You justified Rosan that he is keep satisfied. Apart from that, all of you underestimated. Kabu, you underestimated them so much that you thought pressure group is a minimal effort. And I think even Kim and Kabu, you both underestimated the pressure group. You underestimated them to the level fourth, keep minimal efforts. How can that be possible? How can that be possible? Be realistic, right? So has this exercise given you some insights of how you can face this equation in exam context, judging the Mendelow metrics, judging the power and interest? There is so much on the Google, right, about Mendelow metrics. You can browse Google, you can go through Google. searching on Mendelow metrics. You can get so good articles on Mendelow metrics. Okay, that's the time constraint we had for this lecture, right? Yes, yes, Annalisa, I'll be giving you many more questions, but just wait for some classes to go over. At least let me accumulate 4 to 5 classes, and I'll start giving you many questions to practice, and I will involve you in many questions and classroom events, right? This is just the first week of the classes, right? So don't just be worried about it. So I have a 3-hour class, right, every Friday, and I have just 1 hour class every Saturday, right? So that's the limitation we have for this class. In total, I have 4 hours classes a week, and Mr. Ijaz have 4 hours classes starting from Monday. So I hope you have a nice time with Mr. Ijaz as well from Monday as he starts taking his part of the syllabus. So I'll be seeing you back on next Friday then, because I have classes Friday and Saturday, and you will be seeing Mr. Ijaz on Monday and Wednesday for 2 hours each. Okay. Have a nice day. Time to sign off, and you will be getting the recording and the Word file within the next few hours. So you have to show patience for the recording, which you have not shown for the first recording, right? So show patience. As the recording is available, I'll be posting it on the WhatsApp group and the Word file I used in the class today, and the question of this Save the Bird I used in the class today. Okay. Thanks for joining. Thanks for joining the session today. It was nice interacting with all of you, Annalisa, Rosan, Kabu, Kim, Sarah Zulfikar, and Adnan Khan. And I'll see you next week. Have a nice weekend. Have a nice day. And do join Mr. Rajaz's classes from Monday. Mr. Rajaz will be sharing the link of the Monday class with you over the WhatsApp group. Okay. Goodbye. Allah Hafiz.